the month again, where we get you a monthly Grand Thornton deal tracker. Prashant Mehra, as always, is here to discuss the M&A action in November. Prashant, thanks for joining in. Always a pleasure to have you. We've, of course, seen a drop in terms of the value of deals compared to last year, and volumes for now remain flat. What's the reason for that? And specifically, there's a significant pickup in the private equity deal environment. Is that expected to continue?
Yes, hi Kritika. As we've seen, November has clocked about 140 transactions contributing about $4.4 billion. This has mostly come from the private equity space, which has grown 80% both in terms of values and volumes as compared to the last similar month last year. Whereas M&A has actually fallen down from $3 billion to $7 billion. Sorry, $7 billion to $3 billion. And the reason why this seems so is because, the macroeconomic indicators are all positive, thanks to Mr. Modi, which is why there is a lot of institutional confidence in the market, and that's why private equity seems to be happening. But as we've seen, the average deal size is going down, so institutions are taking smaller risks, but yes, a lot of them are taking those risks. Domestic M&A in particular seems to be very weak. I think really because of two factors. One, there is lack of liquidity in the market. Whatever money is available is probably going towards organic growth, and no money is being spent on organic growth. It's also because of lack of acquisition financing available in the country. And I think last but not the least, the domestic corporate is waiting for some on-ground action where GST will perhaps be a game changer.
Well, we are all waiting for that, aren't we, Prashant? But, I want to understand, given the significant pickup in private equity and the huge decline in domestic M&A deal value, is that a new normal? And by when can you expect domestic M&A deal value or the overall M&A environment within the domestic space to see an improvement?
If we look at the private equity sector spread, 60% of that has actually gone into ITES, which is something which has been trending. Consumer technology is mostly where the money is going. It's not really going in the core sectors. Interestingly, though, M&A activity as such has fallen down, but if you look at the sector spread, specifically this month, more than 80% of deal values have gone in the core sector, which is telecom, BFSI, energy and natural resources, transport and logistics. So there is activity happening, and thankfully the activity is happening in the interesting and the core sectors. And once we see more on-ground action, which is more to do with consumer activity, which is I think all waiting for the GST to happen so that things become cheaper, things become more organized, I think domestic will definitely pick up, perhaps in the first quarter of the next year or the quarter after that.
Everyone's waiting for GST to actually come about. But Prashant, quickly, you mentioned telecom and insurance, and these are the two sectors where we saw the top 3 deals coming in. So specifically, how significant were these 3 deals in changing or in creating consolidation within their respective sectors, specifically in telecom?
Activity in the core sector is important from both perspectives. Consolidation is, of course, one, but I think more importantly, new money is also coming in, which are signs that there is external confidence in the economy, and it is due to pick up, which is why people are just lining up the funds and preparing the platform for demand, and which will come in the next half a decade or so.
All right, since we are in December already, just let's compare 2015 versus 2014. How has this year been in terms of deal environment? And as we step into 2016, what's the outlook right now?
So if we see the year-to-date deal data, it's been at par with 2014, and I think we've got probably just a fortnight left before we close for the holidays, after which deal activity will not happen. So we're expecting about a nominal 10% growth as compared to last year, which is not bad actually, considering the fact that most deal activity last year was actually the one which was sitting on the back burner and was just waiting for the government to change hands. And the activity this year is thus real growth. So we normalize that number. I think we've probably seen about 25 to 30% growth this year itself. So it's not a bad year as such. Next year, lots of things are happening. FDI norms are there, the GST is there. We're looking at a revised GDP at 7.6% or so. So a lot of flag posts there to give even a better thrust to the ongoing deal activity, and hopefully we'll have a very, very exciting 2016.
Hopefully, and on that note, let's end this discussion. Prashant, thank you so much for joining in.